In this video, we will discuss the accounting for long-term contracts. So this is the third video discussion of the concept of income. So what is a long-term contract? A long-term contract means building, installation, or construction contracts covering a period in excess of 1 year. So in this case, the taxpayer, our taxpayer, is again engaged in servicing business. However, the service to be rendered is more than 1 year. That thus, as cash basis of accounting is not applicable in this case. Persons whose gross income is derived in whole or in part from such contracts shall report such income on the basis of percentage of completion. So, example of persons engaged in long-term contracts are contractors. We have construction contractors or IT developers. Okay, so these people are engaged in long-term contracts. So they must report their income for taxation purposes using the percentage of completion. In accounting, in our accounting subjects, there are several methods used in recognizing revenue, such as the cost-to-cost method or percentage of completion method. However, in this case, we will solely use the percentage of completion in computing income for taxation purposes. For example, Emerald Information Engineering Incorporated closed a 30 million peso deal with Diamond Technologies to develop a software for Diamond's business analytics. The design and development of the software would take 3 years to finish as projected by the lead engineer of Emerald, Zach. The prototype software, after completion, is still projected to undergo testing and modification. So Emerald Information Engineering is our taxpayer here. Uh, it will be the one to develop a software for Diamond. And then the deal is 30 million pesos for 3 years. During the development, the accounting records of Emerald show the following. So in 2018, we have actual cost incurred to date. When you say actual cost incurred to date, this is the total cost accumulated from the beginning of the contract to date. So for 2018, it's 12 million. On the second year, 2019, it's now 21 million. Therefore, there's an additional 9 million cost incurred in 2019. And in 2020, we have 23 million 500. Take note that this cost is accumulated or cumulative rather, and the estimated cost to complete is 10 million in 2018 and 3 million in 2019 while 0 in 2020. The percentage of completion in 2018 is 60%, while in 2019 it's 85%, and at the end of 2020 we have 100%. So we will compute the income to be recognized by Emerald in its income tax return. So our solutions would include 2018, 2019, and 20. The contract price is the 30 million peso deal. Okay? So that is 30 million. While the percentage of completion in 2018, we have 60%, we have 85% in 2019, and 100% in 2020. So the revenue earned to date, take note it's earned to date, meaning cumulative from the first year and so on. For 2018, it's 18 million. For 2019, it's 25 million 500,000. And of course, for the last year, since it's 100% completed, therefore it's 30 million pesos. Okay, so these are the revenues earned to date, less the cost incurred to date. Again, when you say cost incurred to date, this is the cumulative cost or total cost incurred from the beginning to date. So we have 12 million, 21 million, and 23,500,000 pesos. So the gross income to date, we have 6 million. Okay, 4.5 million in 2019 and 6.5 in 2020. However, this 6 million, 4.5, and 6.5 are not yet the income to be recognized by Emerald. This is not yet the income. Why? Because we need to deduct the income already reported in the previous year. Okay? So for 2018, since this is the first year of the development of the software, then there is zero income already reported. Therefore, our gross income this year, it's still the gross income because we need to deduct yet the expenses, right? So we have 6 million. Therefore, in 2018, Emerald should report a gross income of 6 million pesos. Okay? Okay. So in 2019, however, the gross income to date, take note, it's to date, meaning this is cumulative, is 4.5 million. However, Emerald has already reported 6 million gross income last year, 2018. Therefore, Emerald has overstated the reporting of income in 2018 by 1.5 million pesos, right? Why do we need to declare 6 million in 2019 when in fact it's just 4.5 million, right? So you need to deduct the income already reported last year, and that was 6 million. Okay? So that we get the cumulative balance. If we will add 6 million and one negative 1.5, we will get the 4.5, the gross income to date. Again, if we will add the 6 million and the negative 1.5 million, we will get the 4.5 million gross income to date. Now, in 2020, okay, so since in 2019, the gross income to date was 4.5, so we will bring this down. So, Emerald will have to report an income, the gross income this year in 2020 of 2 million. Okay? So, in short, the cumulative balances are being segmented into years. Okay, so if we will add the 6 million, the negative 1.5 million, and the 2 million, this one, if we'll add this together, this becomes the total income for 3 years, which is 6.5 million, which is also the same in the gross income to date in 2020. Okay? So, if I'll be asking you, how much is Emerald's gross income in 2018? The answer is 6 million. If I'll be asking you how much is Emerald's gross income in 2019, the answer is negative 1.5 million. Why negative? Because Emerald has already reported 6 million in the previous year, 2018, and the correct gross income to date as of 2019 is only 4.5 million. Therefore, we need to deduct the 1.5 million. If I will be asking you, how much is Emerald's gross income in the year 2020? The answer is 2 million. Why 2 million? Because Emerald have already declared an income or gross income to date of 4.5 in the previous year, 2019. So what about the estimated costs? Remember, in the problem, we are given the estimated cost to complete the contract. What about those? So for accounting purposes, estimated costs are necessary to estimate the revenue under the conservatism principle. Again, for accounting purposes. But this is not accounting, this is taxation. For taxation purposes, however, these costs are not necessary in the computation of the income since they are not actually incurred. Therefore, they are ignored in the computation of the income. Okay? So I hope you learn a lot from this discussion and I hope you will watch the next video for the concept of income. Thank you for watching.